Intercompany transfer of services. In this learning objective, we're going to continue our downstream sale of equipment example, and we're going to look at it in the second year, or X8, based on the information, but it's the second year of the transaction from the time the subsidiary purchased the equipment from the parent. And in this learning objective, we're going to combine the equity method of accounting and consolidation accounting into one video. The X8 activity has all of the normal items that we've got: the subs net income, dividends, and then as you can see, in X8, or the second year, we don't have any unrealized gain or loss to deal with, but this excess depreciation that existed in X7 will continue to carry forward for a while. Here's the information. Here's the net income and dividend entry. Let's look at the special allocation. Now, what we have to remember is that each and every year, the parent and the subsidiary can be no better or worse off due to a transaction. And if you remember correctly, the subsidiary is depreciating that equipment at $27,143. That's fine that the sub is doing that, but for consolidation purposes, we've got to bring the depreciation back in line to what would have been taken if the parent had continued to own the asset. And that is $22,500. So each and every year that the sub continues to hold this equipment, we're going to have to make an entry to account for this excess depreciation. So we'll do that for year 7 all the way through to the end of 10 years, or 7 more years. And what we're going to do is we're going to debit investment subsidiary, credit income from sub for $46.43. And here's a recap of the journal entries. It's a little clearer when we see the reconciliation between the two parties, how this is going to work. We see that the sub has net income of $63,000. Included in that number is a depreciation deduction for $27,143. By the parent adding that $4,600 back, it is going to bring depreciation expense to $22,500 for this transaction. We see the book value schedule here, the investment schedule, and the NCI. Let's look at the consolidation accounting that relates to X8. I'm going to go through EJE 1, 2, and 3. You can review those on your own if you need to, but here they are. If you need them, we've got the book value schedule, gives us the current year activity. It also gives us the NCI values and the subs equity. The journal entries, or the EJEs of interest, are the excess items. And the equity method entries, we're going to start with that first. This is what we just made. We debited investment, credited income for the $46.43. We must eliminate this, and we do that. We debit income from sub, credit the investment for $46.43. The next EJE is the unrealized gain that we had. But you have to ask yourself, was that gain related to the prior year, X1? We shouldn't have to do that again. That's over with. Well, if you remember correctly, we have some asset accounts involved, so we have to continue to do this. And the reason we need to do this is that the equipment is understated. If you remember correctly, the equipment on the subs records is at 190, and it should be at 225. So we're going to have to make some entries to restate the equipment to its correct value until that equipment is sold to some third party. So the easiest way to do that is to ask ourselves, what did we do last year? Remember, this is the entry we made last year. That entry there eliminated the gain, it reestablished the equipment, and it reestablished the accumulated depreciation we had taken thus far. Well, where do revenue and expense accounts go when they close out? The investment sub-account. So in X8, our starting point is going to be the entry we made last year, but instead of putting it to the gain on equipment, we're going to put it to the investment sub. And when we clean it up, it looks like this. We have another EJE that affects us as well. And the sequence here is that anytime we have an entry, and part of that entry goes to an asset or liability account, that account is going to carry forward going into the future. So we're going to have to address it each and every year. The first is the depreciation. So again, where do revenue and expense accounts go when they close out? Investment sub account. Well, this is what we did last year. So this represents the depreciation, the excess depreciation entry we made for 2007, or X7. To fix that for X8, we're going to need to put that into the investment sub-account. Right, we see here I've got another EJE, and it relates to excess depreciation. What's going on? Remember what we have to do. That excess depreciation amount is going to stick around for 7 more years. Okay? So what happens is we need to adjust the excess depreciation for X8, the current year. So here's what we're going to do. We're going to debit accumulated depreciation, credit depreciation expense for 4643. Now, what this entry here represents, it represents bringing that depreciation down to 22.5 for the current year. The previous entry was for earlier years. Let's look at the EJE recap. I think it'll be a little clearer, and let's focus on the second page here. and we'll walk down through EJE 4, 5, 6, and 7. EJE 4 eliminates the entry we made in the equity method. So at this point, on the 3-part worksheet, the sub has depreciation of 27,143. Right. The second entry, EJE 5, reestablishes the equipment to 225, reestablishes the accumulated depreciation, and we bring that to the investment sub account. Now notice that EJE 6 and 7 are related, but they relate to different years. And I've kind of identified those for you so you can see this. The first entry, number 6, represents the depreciation or the excess depreciation we did for X7. Debit accumulated depreciation, credit investment for 4643. The EJE 7 represents the excess depreciation for the current year, X8. So what's going to happen in future years, so next year in X9, the third year, what we're going to have is we'll have EJE number 6. EJE number 7 will change to accumulated depreciation, investment sub, and we'll identify it as X8. And then we'll have an additional entry, which would be number 8, which would be accumulated depreciation, depreciation expense for X9. And we will have this for 7 more years. So we would have we'd have X7, X8, X9, 10, 11, and so forth for the next 7 years.